Sam, I'll start it off with you, because if you take a look at the lows of yesterday's session, down 900 points, all the way up to where we are today, which is Dow implied open up 82 points. You could argue that this is quite a turnaround in the markets. But for you to be convinced that this sticks, what would you need to see?
Well, I would need to see follow through. I mean, I like to say that there's usually a pop after the drop. And if you go back to World War II, we've actually had 43 times that the market fell by about 3% in a bull market. And even a month later, while the market was higher about 2 out of every 3 times, we still had not recouped all that we lost. So I think I need to see what happens not only today, but also for the rest of this week to see if there's true meaningful follow through.
When you're watching what else happens, are you also watching what happens in terms of the barbs being traded between the U.S. and China? And it seems like there's a little bit of backing off, a little bit of cooling of heads this morning in terms of China's response. The ball is in our court, I would say, at this point.
Well, I guess what I'm trying to figure out is, did the president up the ante on trade in order to get more pressure on the Fed? If that is the case, to me, that would be like drilling a hole in the bottom of your boat to drain out rainwater. So, you know, my feeling is we got to be careful what tact we take to get the desired outcome.
So even the Fed funds futures, the pricing of a 50 basis point cut in September has gone up sharply since Friday. Ellen, that wouldn't be enough to offset the concerns in the market that would exist because of an ongoing and deepening trade war.
It's unclear whether or not the problems that we're seeing in terms of global GDP slowing, global PMIs slowing, and other weaknesses that we're seeing are due to interest rates that are too high. And I think there's some concern that the Fed is to some extent pushing on a string, as it were. And I agree with Sam. I think that there is certainly some chance that this most recent ratcheting up of tensions was in some part designed to respond to what you were saying earlier, Kevin, about the Fed responding to this trade war. But the results are real. We've seen this slowing in the industrial economy here and in other places, and part of that is due to the uncertainty and the slowdown from the trade rhetoric. So I don't know if a 50 basis point cut or even more than that is going to turn that industrial economy around.
In the meantime, I know we just came off of a pretty decent second quarter earnings season, but we're at the point now where we're approaching September. September is traditionally the time when companies decide what they're going to spend and how much they're going to spend. And if we enter September with this turmoil and volatility in our hands, Sam, what would you think about third quarter earnings?
Well, third quarter earnings right now are expected to be negative, but then second quarter earnings initially were negative. First quarter earnings were initially negative, and now this is going to be the 30th consecutive quarter in which actual results have exceeded end of quarter estimates. So right now, the earnings recession is off the table because while the third quarter is expected to be down by about 2+%, fourth quarter is expected to be up by 5% or more. So right now, earnings recession has evaporated.
Ellen, business activity has slowed somewhat. Business confidence has reduced somewhat. But meanwhile, the consumer just keeps chugging along, particularly here in the U.S. Who wins?
The consumer is 2/3 of the economy here. So right now, our base case scenario is that the consumer is going to win. As you say, we've seen strong retail sales. We've seen very low unemployment. We've seen wage growth. Consumer confidence is near an all-time high. And the consumer seems relatively unaffected so far by a lot of the uncertainty that's gone on in the industrial economy, both here and globally. And of course, part of the question will be with this newest round of tariffs, which is slated to hit the consumer more than the previous rounds are, is that going to begin to be dented? Right now, we are expecting that it will not make a significant difference, but that's the biggest point of pressure.